Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Friday, January 14th, 2011. This morning I'm talking about Citizens of the World Unite. Now, before you go thinking I've got all communist on us, what I'm going to talk about today is what I'm going to call my capitalist manifesto, and I'll get to that in a moment. But what I really want to talk about is what's coming down the pike, and that is inflation. I've been speaking about inflation over the last couple of days, and now we're starting to get some readings to confirm that indeed there is some inflation going on around the globe, which is due to massive accommodative monetary policy that we've seen for some time, and now it's coming home to roost. So just yesterday, just want to take a quick peek here at the euro. All right, and we'll just show you that on the 30-minute chart. Okay, you can see the euro made a massive move higher. Okay, went roughly 300 pips in a 36-hour period there, and that was a result of the hawkish comments that came from ECB President Trichet, who, at the rate policy meeting, made some hawkish comments about inflation, how it's going to affect, the Eurozone economic recovery, despite the problems that they're having with the sovereign debt from some of their nations. So it was a little bit of a surprise yesterday, induced a lot of short covering, and the euro took off. And, this inflation did not escape the notice of the Chinese either. Last night, they raised their bank reserve requirements by 50 basis points in an attempt to curb lending to reduce the money supply to kind of slow down demand. Now, just yesterday, Secretary Geithner here in the U.S. noted that Chinese yuan appreciation may not be such a big deal anymore, as the inflation in China is essentially pricing them out of the market. Now, I can confirm this. I know some small businesses here that do business with China, and they're already starting to look for alternatives because prices are getting too high in China. Demand is also increasing there, and quite frankly, they can't handle the business that is coming to the U.S. So, keep an eye on India, folks. That could be the next, major place. Not that India isn't already, but getting back to the CPI data. Okay, we had German CPI data this morning came out. It came in as expected, but I think that was a case of what was going on with the euro yesterday, and sort of Trichet setting it up for the comments. So earlier the euro was down. We can just see here, go back to the 5-minute chart. Okay, you can see that the euro was down earlier, but it's starting to pull back now and starting to gain a little bit, just ahead of 134 even. All right. We also had in the UK, we got the pound stronger as well. All right. Looks like big range going on there for the pound. Their PPI input data came in much higher than expected. Now, we're going to get their CPI data next Tuesday, and if it comes in higher than the expected 3.3%, which is already outside of the target band of 3%, then there's going to be some serious pressure put on the Bank of England to do something about their monetary policy, whether it's raising rates or whether it's reducing bond purchase program or whatever. And then also want to talk about what's going on here in the U.S. We also had CPI data this morning, and it came in much hotter than expected, showing a rise of 1.5% versus the expectation of 1.3%. Now, this would come as no surprise to anybody who has children, has to buy milk, or if you have to commute to work, potentially pay for gasoline. All right, we've got agricultural commodities prices are near all-time highs right now, and it doesn't look like there's any respite in sight, because there's no confidence that the Fed's going to do anything about monetary policy, and that they're going to prefer to let the U.S. consumer pay this hike in prices here in order to save their precious banks. Now, I just want to show you some other currencies here. We've got the Aussie lower. Okay, that's on the Chinese slowdown. Same here with the Kiwi. All right, Australia is China's the largest importer of Australian goods and energy. We also had the loonie here, which was a lot lower earlier, but it's coming back now. Here in the U.S., we also had retail sales figures, which showed a gain of 0.6%, which is a gain for 6 months in a row. That's what the mainstream media is reporting is a good number, but the market was actually expecting 0.8%. So it is a little bit of a disappointment. Now, people always ask me, well, what's the problem with inflation? Well, let me tell you, the problem with inflation is that it acts as an insidious tax on consumers around the globe. And we're seeing inflation right now. I mean, nobody cares about the emerging market countries, but they're seeing massive inflation in their countries, and now it's coming home to roost in some of the more major economies as well. And what inflation does is, as prices go up for goods and necessities, it costs people more, and it acts as a disproportional tax on people, because if you're someone who's very wealthy, then paying $1 more for a gallon of gas doesn't really matter to you, whereas if you're someone who's just trying to make ends meet, then that could be very significant, especially in this cold winter. If you need to heat your home, price of heating oil goes up higher because it's tied to the price of crude oil, then you might be in for a very cold winter. So I'm saying citizens of the world, unite. We've got these central bankers who are keeping rates at just extraordinarily low levels, all right, and it's all to help out their bankster buddies, who got us into this mess in the first place. The reason why rates are so low is everyone's so fearful about, overvalued homes, that if the price of housing comes down, the banks are going to be harmed again, and then all of a sudden, these big CEOs aren't going to be able to pay themselves massive bonuses. Well, I don't know that, this is necessarily, the way we need to go here, helping out the few at the expense of the many. But that's what we're seeing here, and I got to tell you, it's no coincidence that central banker is not an elected position, because I don't think anybody would be voting for that right now. So what's one to do in this situation? Higher prices are coming down the pike. There's no conviction that the Fed's going to do anything to fix it, and this is going on around the globe. Well, folks, the answer is the Forex market. All right, if you know how to trade currencies, okay, you can save and help protect yourself from debasement of your currency through the actions of central bankers by taking your money and investing it elsewhere. So we've got awesome courses we offer if you don't know how to trade this market, and if you have any marginal interest whatsoever, I would highly suggest you get involved. So that's what I've got for today, folks. Today's Friday. Next Monday is Martin Luther King Jr. Day here in the U.S., which means that banks are closed, stock market's closed, but the currency market will still be trading. So that's what I've got for today. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.